Hey everybody, it's Brian over at Showcase Agency. Today we are going to talk about reverse mortgages. So what is it about a reverse mortgage? How can you qualify for one? There's really only 3 qualifications. You've got to be at least 62 years of age or older. So that's requirement number 1. Number 2 is you've got to have enough equity in your house to be able to pay off whatever liens are on the property. So that could be, you know, if you have a mortgage, that's going to be a first position lien. If you have a home equity line of credit or home equity loan, that's usually second position. You might have a PACE loan or HERO loan. You might have property tax lien. All that stuff has to get paid off at closing. So you got to have enough equity to do that. The only exception would be if you were short, but you had the cash and you could bring in the cash to cover the difference. That would be okay. So, but you've got to have enough equity or be pretty close so that you can, bring in the cash. And then the last thing, the third thing, is what's called a financial assessment. So this hasn't been part of reverse mortgages forever. It's only been around probably like 10 years. But it's called a financial assessment. And what it means is there's not a debt to income ratio on the loan. There's not a debt to income requirement. Like on a conventional loan, you might have a 50% debt to income ratio, or on a FHA loan, you might have a 57% ratio. On a reverse mortgage, there's not a ratio, but you have to have some discretionary income left over once you've paid all your bills, and that includes paying your property taxes and your homeowner's insurance, because those are things that you're going to pay now. It's your responsibility with the reverse mortgage, compared to if you had a traditional loan and you were impounding for taxes and insurance, then your mortgage company was probably handling it for you. So the last qualification, that's the financial assessment. It's not a debt to income requirement, but you do have to have about $800-ish left over every month. If you're single, you got to have around $1,100 a month left over if you're a couple. And if you're short of that and you still want to get a reverse mortgage, it's possible that you still might be able to qualify. There's a few different things that can be done. One is what's called asset depletion. So we take a look at your assets. If you've got a good amount of in your retirement account, that could offset some shortage if you weren't passing the financial assessment. So that's one way. Hope you guys found this helpful. I want to tell you about something that will be really of interest to you. Is we do what we call a reverse mortgage discovery call. And that's where you, as a person that's interested in a reverse mortgage, you're thinking about it, you want to get some numbers, you want to get your questions answered. We call that a reverse mortgage discovery call. So there's no obligation, there's no cost for it. You'll get a few things after the call that you'll find are really helpful. One is a loan quote. Typically people are looking at 2 options nowadays. They're looking at a fixed rate. They're looking at a variable rate. There's pros and cons to each. Most of the time people are going with the variable rate. So we make that, we do that discussion. We get you the quotes for both. The other thing that we're going to get you is what's called an amortization schedule. And this amortization schedule is super helpful because it helps you to see your loan balance, how it's estimated to grow over time. Because remember, your balance is growing, unlike a traditional loan where you're seeing your balance go down. This one, you're going to see it go up every month because you've got a mortgage insurance premium that's paid to to HUD, and you also have interest that's accruing. So the balance is going up. But what else is also growing is going to be your appreciation. And then the other thing that grows is if you go with a option that gives you a line of credit, whatever you haven't used on your line of credit, that grows around 3 to 4% a year. So the amortization schedule is super helpful because it covers all 3 of those things. So you get that, you get the loan quotes. There's no cost, there's no obligation. You can sign up for it at showcasereverse.com. And then the second thing that you might be interested in is our reverse mortgage guide. It's called Reverse Mortgage Pros and Cons, everything you need to know. And you can get a copy at showcasereverse.com. And then one last thing is we're posting a lot of videos, short videos on very specific reverse mortgage topics. And you can see that over at reversemortgageyoutube.com.